Pramod, just quickly shifting gears to Maruti. Again, the street is very enthused with their performance thanks to the yen's depreciation, but headline growth is still missing for the company. What is your sense?
See, I think if you look at Maruti's benefits on margins, it has come on three fronts clearly. One is superior product mix, where more of Dzires and diesels have definitely helped them. Two, their own internal cost reduction exercise like localizations, which they have been doing for last couple of quarters, has yielded big time results, and I think the benefits there have been better than expected and lumpy in the quarter. And the third has been on the price hike which they had taken in the early part of the quarter, has played out well to boost the margins, and all these factors acting at the same point has elevated the margin profile definitely for the company.
Okay, Motilal Oswal declaring their numbers and giving the outlook. Let's listen to the gentleman.
News were up by 17% Q on Q and about 3% year on year at about 130 crores. And profit after tax was significantly higher at about 36 crores, almost 60% over last year and 25% quarter on quarter. This was because of we had almost one time return on investments which we had invested in private equity. So that is kind of contributing to the extra profit in this quarter. Then we had margins were very stable. EBITDA margin at about 33-34%, PAT margin about 20-23%. So margin structure was very stable. Even for the year, the whole year was kind of top line was very stable, bottom line was stable. So probably we have seen, it looks that this is the year of stabilization. In fact, I am surprised to see the kind of stable performance financially. It has been contributed by changing the revenue mix, and we have tilted more towards asset management fees than broking. But overall, as a company, we have had a very stable performance. Coming to the dividend, we have consistently been increasing the dividend, and this year we have taken the dividend to 2 rupees, and that is about 33% of the payout.
About 35%.
Yeah, about 35% of the total profits have been distributed. So we have been steadily increasing the dividend, and on top of it, we have announced a buyback of shares. Technically, we can buy about 6% of 6 or 7% of the outstanding shares. We have proposed a buyback at about 90 rupees. Our current breakup value is about 85 rupees, and we think that by the time we complete the acquisition of the shares, it will be more like 89-90 rupees. So we have proposed buying back the shares at about one-time book, prevailing at the time of purchase, and we hope to complete the purchase in course of time after the due formalities are over. So that way we would more or less pay out everything by way of dividend about 35%, and other 60-65% would be paid out by way of buyback if the whole thing is successful. So what it will mean is that the capital employed of the company at the beginning of the year and end of the year would be more or less same, so what we are trying to do is that we are trying to see that return on the investment for the company's businesses starts inching up, and hopefully bit of tailwind from the businesses that will help us go to much more logical level of ROIC in years to come. So that's what our net worth of the company is at about 1220 crores, and with this buyback I think it will get reduced to more like 1150 crores.
Yeah, 1170 crores.
1170 crores for the opening of this particular year. Thank you very much.
So I have a couple of questions.
Yeah.
To Z Business. So we have seen the market volumes are not picking up. What is the effect that is there?
So market volumes have grown, but the mix has changed. More and more we are seeing F&O and derivative volumes going up, and cash volume is actually shrinking. And the brokerage bearing volume is cash volumes, and that has been shrinking in the marketplace. So as the market revives, as the cyclical upturn happens, we expect that cash volume also revives, and of course the derivative volumes correspondingly will go up.
Well, so that's the management of Motilal Oswal there talking on their quarterly performance. Time for a quick break, but on the other side, we focus on a couple of stories that we've been tracking since morning, coming up in 2 minutes.